Steve, it's great to have you on with us, and want to get to you first on where we are with equities right now. Of course, earnings season is upon us. A Fed decision is on deck for tomorrow, and the specter of tax increases is on the table. What do you think are the main directional drivers of equities right now that investors should be watching?
Well, thanks for having me, Emily. First and foremost, the main directional driver for equities is the fact that the Fed continues to pump money into the market. I mean, I don't mean to be that simplistic, but even until or unless the Fed tells us otherwise, which they could tomorrow, but it's unlikely. That is what's putting a floor under things, and that's what's providing the ammunition, so to speak, for the market rally that we're seeing. That said, markets have tended to have little hiccups when the Fed chairman is talking. We don't know what he's going to say in the aftermath of the meeting during the press conference. We've seen some nasty downdrafts after that. But bottom line is, as long as the Fed stays supportive, we're still getting the fiscal stimulus working its way through the system. Any further stimulus is probably less likely to be a free lunch, so to speak, because there'll be taxes more likely associated with it. But as of now, the Fed is providing the tailwind that the market is enjoying.
Yeah, Steve, I wonder too here in the question of whether or not we're dealing with kind of money chasing opportunities here, and whether or not companies beating expectations are not really delivering huge pops or necessarily meaningful pops when it comes to the way we've seen shares react to those beats. And I think you can maybe look at GameStop and the move there, as shares are up notably today after an already announced at the market share offering, and people are buying into the idea that maybe GameStop's back again. I mean, when it comes to speculative bubbles here, where do you put us in that, in relation to what the Fed's done, and how investors should maybe start taking notice of it?
Well, Zach, I'd say we're a bit less bubblicious than we were late January. We're not seeing the kind of stock market volumes. We're not seeing the kind of call option volumes that we saw then. We're not seeing the penny stock activity, thank goodness, that we were seeing then. But that doesn't mean speculation is gone. I think the fact that the market response has been relatively muted to companies reporting good earnings, they really have to do something special, I think, to move the market. I get the sense at this point that better than expected is what's expected, and you really have to do something special, like UPS or like Goldman Sachs did, that got the stock really moving. Because if you put out a bulletproof looking quarterly result, the market will in fact reward it. Other than that, if it's just average better than expected, a few pennies better here or there. I think it just means the companies have been very skillful at guiding analysts, and I suspect that analysts may not be so quick to discount some of that activity going forward. And so I think that's why we're seeing relatively muted views, and I think we're seeing relatively sanguine options markets in many cases going into some of these earnings results because of it.
Steve, sort of to that point, what do you see as being the role of retail investors going forward? Because we saw this huge influx in participation during the pandemic. There was perhaps not a whole lot of competition in terms of entertainment, but where do you see that shaking out once things start to reopen further?
I actually see it as one of the risks to the market, which is kind of paradoxical. We've got a couple of things coming down the pipe. First of all, taxes are due in May. A lot of retail investors made money in 2020. That's a good thing, but it means you have to pay your taxes. And if you're fully invested, where's that money going to come from? Out of your equities, out of your stock market portfolio. So I actually think we may start to see some net withdrawals coming into middle of May as taxes need to be paid. Remember, they're pushed back a month this year as opposed to normal. The other thing I think that you're getting is competition, as you alluded to, Emily. Competition from life. I'm vaccinated. I'm started planning vacations. I went out to dinner with my friends last week for the first time in ages. Money is getting spent in other ways, and I think people are going to start to think, where I've made all this money in the markets, I can spend it, and I think you're going to start to see that competition from life. It's good for the company's bottom lines because ultimately it's going to be spent there. But if you're a believer that money flow is what's driving things, this is actually a headwind that that people are finding other things, that people will start to find other things to do with their time and their money.